Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Okay, thanks, Marty. And can somebody please check YouTube? I'm not able to see it at the moment. Let me know that I'm okay over there. Yeah, Stephen, could you take a look over at YouTube there? Um, you have to try to get a link. Sorry, guys, about this. Been kind of busy this morning with the market. Um, let's see if I can get things cooking here. Okay, can I get a check in YouTube, please? Uh, I don't see the chat. Okay, good. All right, thanks, everybody. Well, good morning, everybody. Thanks again for visiting the Trader Lab. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. This stream is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars. And what you're going to see here, it's the same thing every day. What is different is not the process of trading, but the random outcome of all trades and also market mechanics. Market mechanics stay the same. The actual behavior of the participants at any moment is always unique. So the business of trading, if you're interested in the actual business of trading, operates like gaming theory. So if you think about setups, which we're all kind of focused on, it's the same as gaming in the sense of how casinos operate, except what their quote setup is are called games. So gaming theory is about probability, it's not prediction. So the business of trading is not a predictive business, and our human nature is looking for certainty and the ability to predict an outcome. And unfortunately, in the trading business, if you choose to be in it, you really need to reframe the business you're in. We're not in a let's be right, let's get confirmation, let's be certain business. That is a result of our primal wiring to avoid the saber-toothed tiger. We are in the business that the casinos are in, and that is only playing games that have a statistical advantage to the house, playing exactly the same way, and accepting the random distribution of outcomes just like the casinos do. Cards come out of the deck randomly and gamblers play the cards randomly, so the casinos pay the gamblers. We pay the other participants. However, if we only play games or take trades that have an edge, a vetted, structured edge, which is what we focus on in Trader Lab, then over time, assuming you do the work and you develop the discipline to only interact when that edge shows up, you might have the same opportunity that the casinos have. And the casinos, I think, have done pretty well. That's the business model. That's what the Trader Lab is built on. And if you're interested in the business of trading, that's why you might want to visit Trader Lab. Trading is not a video game. It's not for the adrenaline, dopamine fix. It is really for those who are interested in business. Now, a couple of things, and then we're going to get right into today. First of all, we have some specials, if you will, and there's only 48 hours left to save 50% on the MBO bundle. What's MBO? Market by Order Bundle. It's an add-on for Bookmap subscribers, and it stops icebergs, allows us to see more inside the order flow. And order flow is an integral part of what many retail traders use, and of course professional traders. And the thing about it is most retail traders never develop enough to use a high tier order flow tool like Bookmap. And the thing in this business is obviously edge. How do you get an edge? Well, the tools, learning how to, what the business really is, not what we imagine it to be, and then maybe being in a community that'll support you and also help you develop the business. That's what Trader Lab is, but this is what we need as developing traders. MBO is market by order. What makes it so important is that the CME, Chicago Mercantile Exchange, tags their orders and makes this available to the public. Tags mean like what's a limit, what's an iceberg, what's a stop, what's a market order, right? And if we can see the different participants, that insight becomes more granular. And because we have additional insight, it might convert to a better edge. Now, the other thing, and this only is going on for the next couple days, to the 31st. So today, tomorrow. Now, there's another one going on here, and this is the best I've ever seen. It's for Global Plus. That's all the bells and whistles, other than the add-ons you might want, like the MBO package. You don't need to start with the MBO package, but I use it. But this is the Global Plus. You execute off the Global Plus. It's got everything but the kitchen sink, and you can go to bookmap.com. But here's what's important, 30% off the annual subscription. Never seen it before. I don't know if we'll see it again. I can say I think it's a terrific opportunity. And that one goes to January 2nd. So all these are available. You go to bookmap.com, deals, read about it. Now, if you took previous opportunities like the Black Friday opportunity, all these things can be rolled in together. All that can be explained, or you can send a message over to support if you want to clarify any of this. So let's get going. Grab your pen and a piece of paper. I got to take care of a little business here, and we'll go from there. General disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. It is based on the structured trades that are available to all of you in the Bookmap Discord Trader Lab community, as well as a library of webinars that will help you understand what you're going to see here and what you do see every day. In addition, the Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. It is a community of traders. It doesn't matter what you do, how you do it. None of it matters. What matters is you want to get better. And if you're not a profitable trader, I can't say the Trader Lab will be your solution. I will say no matter what, you will learn more, not only about trading than you might have ever seen before, but you're going to get the straight oil from the can, and you're going to be in a community with other traders. Many developing traders, other profitable traders, and traders who are on their journey in building the business. Most of us think this is like a video game, and I can assure you it is not. I can assure you that it is just a business, but most of us don't know the business we're trying to be in. We think it's something else. We think it's the rotations and clicking the mouse and playing a video game. And I'm always going to say, if you want to play a video game, or you just want to play a game, go to casino, get the cocktails, and be sure to get the ticket to the buffet. The casinos want you to come in, and yes, gamblers get paid. We pay when we take stops also. Everybody gets paid. It's just who gets paid more. This is end of day Friday. Now, this is something interesting, and I'm bringing this up. In fact, there's I made Friday's stream public. And maybe, Stephen, if you have a chance, maybe you can throw that link, or somebody else, Friday's link. It was about trend trading and setups, and it's sitting in the Bookmap Discord Trader Lab community. It was posted at the end of the day on Friday. So if you can just grab that link, maybe Stephen, if you have a moment, and then put it in the chat for our visitors in YouTube. Also, no, Len, you got to register. So you've got to go to the Bookmap Discord, and you have to, you'll see join, and you must register, confirm your username and all that. And then you can come over to TraderLab. By the way, if you have questions, please post them in YouTube. I'll do my best to get back to them. Thanks, Stephen, if that's it. Also, in the Bookmap Discord TraderLab community. Let's go. Now, what's interesting here is, you know, we had a gap on Friday. So this is your Santa Claus rally thing going on. This was Friday, and this is yesterday, Monday. So at least I hope it is, because I'm not sure what day it is anymore. Actually, today's Monday. This is Friday. Wow. Shows you. And by the way, I'm streaming from Costa Rica. There's always a possibility the stream will go down or the power will go out. It doesn't need a reason. It just does it. So if I drop out, if you're in YouTube or the Bookmap Discord TraderLab community, I will come back. It takes maybe up to 5 minutes. If you're in YouTube, a link will pop up and you can continue. So this is Friday. So we gapped here, took out the stops here, and our target was outside target was 59.60. Now we got to this level, 59.85, and I think 82 was low of the day. There's no precision, but this is the auction. And then we squeezed the shorts and we closed up near the high of the day. Now, as of Friday, when I saw this behavior, I said, well, this will be cool. We have a gap here and stops above this high, and there's a reasonable chance we'll fill the gap and maybe come here or even come back here. That was my as of the close Friday. But what happens today? Well, we open under 60. And 60 was a key level from Friday. I'm sorry, here, 60. So this was our target, extended targets. Anyway, that's all in the stream. I posted the link in there, or Stephen did for me. Thanks, Stephen. Now, let's come over to today. And then you're going to see all these levels in my book map. So let's look at this. This is the current day. Now, I want to show you something, because this is auction market theory. And the reason I spend time with this is, what is the market? Is it an indicator? What is going on? Why does the market do what it does? Now, let's accept we don't know why. I should say how. But maybe there's a reason for some of this. You do remember 59.60, right? Now, this is today. We're going to ignore this for a moment. 59.60 was the extended target for Friday. And I'm hoping this is Friday, because apparently I don't know what day it is. And this was our outside target. And then this was the next target down. We didn't get there. We closed up here. Now, what happens here? Here's 59.60. What's under here? Sell stops. What's under here? Sell stops. We gap. Now what? What does that tell us? Now I'm going to show you some ETH trades that I just took some screenshots of. But these are all narrated and discussed in the TraderLab. You can all visit TraderLab if you find this interesting. And our next targets coming down were here and this level down here around 20-ish. So this is the higher time frame, if you will, or intermediate time frame. And by the way, if we got under this, which was the low after FOMC debacle, this is our outside edge, 93.5. And it's still a potential target, not necessarily today, not ever, never, it doesn't matter, right? This is the auction. So we don't know what's going to happen. So it's not about prediction. You're trying to predict something, good luck with that. I certainly can't. And what we can do is we can suspect or anticipate behavior. I'm moving the chart around over here, my investor RT, which is my higher time frame. I just got to move it around, make sure I don't obliterate anything. Okay, now I'm going to show you some trades. Now remember the 5960. This is a structured trade in the Trader Lab. Now this is ETH. The time is cut off. That was nice. But this is a trade. Now, remember 5960. There it is marked on the chart. It's a level. Now, we break below it in the ETH. We come back and check it. So we have liquidity. I'm just showing these are trades that I narrated and other traders took. If you're in Trader Lab, this is part of your trade plan if you vetted it. And right here, we test this liquidity. We see a buy sweep here. This sets up a short. So your entry is here against here, and you take a short. So off you go, right? So there's your short in the Trader Lab. Now, this is the ETH low, and this is the current low at this time. I'm going to take you one slide further. And right now, this is at 47. So let's see where we go with this. 45. So this is the short Trader Lab. And why is this a exit, you're going to ask me? Watch. What do we have here? So we have our short. We have buy sweep here. This is part of the Global Plus package and MBO. You're seeing the icebergs. We're seeing stops. All this is the full Global Plus that we're talking about here that you can take advantage of if you're inclined. And this is a sweep. This sets up a short in the Trader Lab. This is your microstructure, resistance, another short entry, another entry. These are all structured trades for entries. Then, how do we get out of this thing? Where do we get out? Here. I see a sell sweep here, and I don't know, where. Wish I knew. Not gifted with that. So I see here, I see a buy sweep. So I'm looking at this as resistance. I come down here, I see a sell sweep. This puts me on alert for a reversal. Now I come back here, my resistance is here, and I come down. Now right here is where my reversal was. This is micro high volume. It's right there. Now you'll see all this in real time, and also I'll take you back into Bookmap so I can actually show you these structures. And this is your support. Now what happens here? We come back to where? Back to here. Interesting, isn't it? Level. And where'd that come from? That 59.60. This is the auction. And what does it do? Comes back down again. Now, let's move on. If you have questions, post them. I'm just showing you some ETH trades. I'm not saying anybody should trade these. I'm not saying anything. What do I know, right? So, now, our levels. Now, this is the RTH open. Watch. Now, you do remember, and I just showed you, why 59.60 was important. There's the level, and this came off the higher time frame chart. If I'm below 59.60 at the RTH open, what does that tell me? What does this tell me? If I have iceberg stacked here, does it tell me maybe I should be thinking about getting short? What do you think? So let's look at the first trade in the Trader Lab. And again, you have to vet these for yourself. There's nothing mechanical. This is trading the auction. This is auction market theory using a volume profile as a chassis to overlay trades on. Now, I got to make sure my levels are right here. Guys, the overnight volume point of control. Was it at the RT? Is it right at the RTH open? Hold on here. I got to just make sure. I got my levels kind of covered up here. Yeah, it looks like 55.25 right here, which is where the open is where the overnight volume point of control is. A volume point of control is a high volume level. And think of it when you have high volume, it's an agreement on a price, like shopping, retail. And if the price becomes too high, we can leave it. I hope that makes sense. Watch. So RTH open is here, 8:30 Central Time. By the way, don't forget I'm in Costa Rica. So if things go bump, which they can do for no reason, and I drop out, I will come back. So this is the first short that's setting up, and in Trader Lab. Now, why might this be interesting to you? I have statistics, and I don't have time to spend on it, but I'm going to throw just a few of them out there. We're opening lower outside of yesterday's range. We can agree. How about this? The RTH open and the overnight volume point and control are at the same price. There is an 85% probability, past performance not indicative of future results, that we're going to check the overnight volume point and control. Now, but there's more to that. It's also the retail price from the ETH, and you see this yellow line? This is the retail price. Now, we just migrated down. This is another concept, advanced. I don't have time to go into it. You can learn all this in Trader Lab, which is saying everything above us might be too high. I'm always going to say might because that's all you got in trading is, yeah, maybe. Well, if everything above us is too high, I have an 85% probability of checking this at the RTH open, which is right here. And I'm under 60, remember? 60, which is there. I've got liquidity here and iceberg stacking here. This sets up a potential short. But let's say you're going, what's going on? We all do that, so don't feel bad about it. Watch. This is a variable high volume node. I'm going to label it. And this is a process I do because trading, in my opinion, you don't make it up. It needs to be structured. This is what Trader Lab is built on, called structured trades. And it's really just sitting around and waiting for the trade that's in alignment with your plan that has a statistical edge, just like the casinos. You ever go to a casino? They have the dealer. If nobody's sitting at the table, they're not making up a new game. They're waiting somebody to come and sit at the table so they can play the game. If we're going to play the game, it's got to be at a location. Now, I'm going to show you, I'm going to try to keep this basic because in the Trader Lab, we can get advanced. So right here, where we obviously are seeing sellers aggressive, we pull back to the mid in the VWAP. Now, and the volume point of control now is here. I'm going to label this variable high volume node. Just watch what I'm doing. Not saying it's good, bad, or indifferent. I'm just saying it's something. There's also something called the ETH low. And there is, in this condition, over 90% probability we'll take either the ETH high or low. I don't know about you, but I'm leaning towards the low. What do you think? So if I get an opportunity to get short, my first target's going to be the ETH low. And I can anticipate the potential for a reaction there. So if I can't get short here, I have the mid going for the ETH low. I have the VWAP in the mid going for the ETH low and lower. So let's look at these trades. Potential short here. Now I'm going to take you into microstructure. Is everybody tracking? Just want to make sure, you know. Now there's much more to this, but I'm trying to give you a broad stroke so you can get a sense of what is going on and why. What is this? Chop, chop, chop. Consolidation. Passive sellers, passive buyers. Right here, RTH open. We break away. Now, this is more advanced. Test the VWAP. This would be a short. This could be a leaning against this, but let's assume you're asleep at the switch. Pull back here, short. Pull back here, short. Micro high volume structure, break, trigger, test, short, overnight low, high probability statistic, scale, watch. Back to the VWAP in the mid and micro high volume, watch. Short. This is support, variable, high volume node, and this. So short, so what you have here is short, short, test, too low. This is resistance, and you have stops above this swing. Watch. Break low, test, another short, support would be here. Watch. Now, these don't have to be your trades. Pull back to developing volume point of control, which is here. Potential short. All these are shorts in the Trader Lab. And they don't have to be your shorts. They could be the shorts you vetted. And the thing about trading is knowing where your trade's going to show up before it gets there. So it's like a bus. Where do I wait for my bus? 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 Got to label it. You guys see something here? This is Trader Lab. Now, can you learn to do this? I'm asking you. Now, the fact you don't understand it, that's okay. But here's the thing. Can you do this kind of trading? And do you think you could if you could learn it? That's what the Trader Lab is. That's a short in the Trader Lab. This is a short in the Trader Lab. That's a short in the Trader Lab. Now, these are just broad strokes. Where's my next target? There. It's a level. There's more. Watch. Watch. Now, you would take a target here. And there's more. Watch. Watch right here. Watch right here. Now, this suggests a counter rotation. Let's see if we get it right here. I don't know because I can't look over here. I can look here, but I can't see. So let's see. There's your counter rotation. Now, where does it come? Remember, too high, VWAP. We have a structured trade in the Trader Lab called the VWAP or mid to VPOC. This is the VPOC. Remember, this is a potential area for a reaction. This is a sweep setting up a counter rotation. I posted in Trader Lab to look for mean reversion. That mean reversion, this is the mean. So mean reversion means to either test here, break low, or come across. If we come across, it sets up another short in the Trader Lab from here. VWAP to VPOC. Let's see what happens. Another short in the Trader Lab, right here to here. Then, where's our next level? Down here. Let's see what it does. Next level, next target. All this is structured trading in the Trader Lab. Let's watch. Now, would you be having a decent day if you were following this? Questions? Guys, this is Trader Lab, and there is no cost to join the Bookmap Discord Trader Lab community. The Trader Lab, so you understand, is for everybody. Doesn't matter what your approach is. And I would always, so people say to me, is there a right way to trade? You know, developing traders, what's the right way to trade? And I'm going to say, well, it's the way that gives you a statistical edge that is consistent so you can measure it. Doesn't matter how you get there, you know. But most traders are too hung up on the fear of loss, so they put all their energy into creating certainty. If you're not in an environment of certainty, in fact, it's the exact opposite. You're in an environment of complete uncertainty. If you put your energy not into finding certainty, but to defining probability, and they may sound like the same thing, but they're not. If you understood, first of all, most traders don't understand the business they're in. So they bring their fantasy of the business to this business and then try to make this business fit into what they perceive or fantasize it is. It's kind of like we bring beliefs, and I focus on this in Trader Lab because, we believe things. Now, is it possible that, and I always like this very simple analogy. Ancient mariners thought the earth was flat. And if they sailed out to the horizon, they would fall off the end of the earth. Now, this went on for quite a while, you might imagine, until explorers got the courage to go past what they perceived to be the horizon. And of course, they didn't fall off the earth. All the beliefs that were held for millennia, if you will, were changed. But until that time, that's what was the truth for those who believed it. So when we come to trading, we have certain truths and certain beliefs, but they might not apply here. But we don't know that because we can only relate to trading based on our experience out in the planet. By the way, what's this? Level. Where did it come from? I know you're going to ask. Let me show you. Right there. That's the level right there. And if you remember yesterday, where was our level? It was there. Do you see something familiar? There. And now up. Well, So the point is, nobody knows what the market's going to do at any level or anything. That's where the need to be right and predicting comes in. The Trader Lab, we know we don't know. It actually sets you free. Because if you understand you don't know, you're not going to be thinking about knowing. You're going to be thinking about anticipating levels that are created by participant behavior. This level was created because this distribution down here, and what is a distribution? It's interaction of participants. And if this is the retail or high volume in this consolidation, that's what this is, a consolidation. The outside edge, where there's low volume, is right there where the red line is. High volume is there, retail price, and then you have the bottom of this whole intermediate consolidation where, we fall out of there, then we do go to the fallout shelter. But this is where it was too high, and then we broke above it, so now it becomes support coming the other way. Does that make sense? 60 was too low. When we opened under it, it set that up. Now, if it's too low, we come back and we clear 60. We may come back and fill the gap. Is this logical? I'm just asking. Because this is trading, not predicting. But when you understand how the market works, I think it gives you better insight into the possibilities. There's no holy grail. There's no secret sauce. Believe me, if there was a holy grail, I'm sure somebody would have found it by now. And most retail traders are still looking for it. Have you ever thought maybe there is no holy grail? Maybe there's just something, maybe there's something else that you can do to create an edge? You probably all heard about edge, right? Do you know what it is, and do you know how to get it? That's what the Trader Lab is about. The business of trading, building trade plans, vetting the plans, and then overcoming the psychological impediments to actually executing, which are greater than any of you can imagine, because it's the last place that traders look. And every trader, most retail traders are just jumping from chat to chat, educator or internet guru, looking for the secret sauce and the easy. If you're going to keep doing that, then that's your experience is going to be, in my opinion, in trading. You're going to say, yeah, I tried everything and blah, 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 right? Well, no, you haven't tried everything. And you haven't come to a community like the Trader Lab, I can assure you that. And no, there's no big price tag. It's absolutely no cost. But you got to do the work. And most of us want just the plug and play solution. It doesn't exist. So, where does this change? Well, we know this is an outside edge. Remember, there's no precision. So when we're under here, I'm looking at this and I'm going, well, I know this is my outside edge. And if I get under here, where's my next level? Well, it's right here, 12. Why wouldn't it go to 12? How about, I don't know. Do you need to know? I don't know. And this is the bottom of that consolidation, and this would be my target if we actually break out. But what has happened? What's happened is now we're going the other way. Uh-oh. Now, in Trader Lab, what would you do? Let's watch. This is the retail price right here. Here's your VWAP, here's your mid. This might be too low. I don't know. Or I may take this out and keep going. No clue. You're looking for certainty, wrong business. Sorry. Look, I spent so many years looking to be certain. I can't even, I've lost count because I thought it was about confirmation and being right, and, has nothing to do with it. So here's our liquidity. I have some icebergs. This liquidity is material. Now, when liquidity comes into the order book, we really don't know what the intent is. Is it a trap for us? In other words, they show up and we're going to go, oh, let's sell it. Or are they putting pressure? Because we all can look at the limit order book, which is what the heat map represents. And we can see, look at this. But is it only here as a lure to get us to sell and then they flip and we get squeezed? Or are there other sellers coming in, icebergs, coming in here, and this comes into the book to push? So let's see what happens. I don't know the answer. See the liquidity, epoch migration. I have my buyers here. I have a triggering structure here, and I have a variable high volume node here, and I got this. Let's just see what it does. Now, there's a little more to this. You see this structure here? Let me show this to you. I got to show this to you first. I should have marked this for you. Let's look at what this says. First of all, this was a short for us, right, in the Trader Lab. So variable high volume node, I got to label this thing. I made these terms up. When I started doing this stuff didn't exist. And early on, I learned market profile back in the mid 80s from Peter Stottlemyre. He actually came up with the whole thing. And he taught me the market profile. And I thought, oh, this is great. I'm going to use my indicators with this, and I'm going to make it so much better. Yeah, I did really good with that idea. It's the same thing many other traders do who've been using indicators at that point. I was already using indicators for about 6-7 years since I started in 1980. And indicators were just kind of coming into the mainstream at that point because of the technology had developed. So I thought I'd be pretty smart. Yeah, I was pretty smart. I just set myself back a number of years because I kind of believed in the indicators. I just thought it was just persistence, persistence. Well, if your process is defective, it doesn't matter what you do. It's still not going to work. But the problem we have is that everything works randomly. All trades work randomly. If you had no indicators, nothing, and you just push buy or sell, you're going to have winning trades. That in itself is a problem because you think you're in the right path. So right here, it's too high. This right here, volume right in here, too high, little micro high volume node. Let's just put this here. So what is this? Let's just look at this. Micro high volume. So this is a short. There's the volume. There's the trigger. There's the trigger. There's a short. There's a short. This is all Trader Lab methodology, and you could learn that. But let's come back to the trade I'm trying to show you. Where is that? Where's my resistance? Huh, you say. Really? Yeah, really. Wow. Isn't that interesting? There's my level. When I come up to my level, I'm looking for behavior. Right here is microstructure. Now, I'm doing this with the benefit of hindsight. And the other part of this is me or you might not be able to react, because by the time a mere human sees this, the market might be here and your risk would be out here. So maybe that's not a trade that qualifies for you, but let's look at it. So I don't take every trade that I could take because I cannot respond quick enough. But then if I get a retracement, I can then look and say, well, I know if it comes back to this location where the sellers were activated, this area, I can, and let me put a little box around it. And I don't know if it'll ever come back. You know, it's like, and you know how you feel emotionally. Remember, feelings are emotions. So how do you feel? I missed it. Now FOMO. And now the lunatic, who I call Hyde, you know, Jekyll and Hyde, is driving the bus. If you let it. Watch. Watch, the location is here and here. Where's the location? Watch. There. There. Support's here. See this volume? Support. See this volume? Support. Break high? Support. Right there. The low volume. I'm going to draw a little line on the bottom side. I want you to see support, resistance. That's support. That's resistance. Sell this. Cover ahead of that. Come back here. You could sell this. You got to cover ahead of this volume, right? You'll see the volume. I'm marking them. They're sticking out there on the right side. This is support. So what you have here is support, resistance. Support, resistance. Outside edge. Support, resistance. Outside edge. Watch. Support, support, okay, this, no clue, not my job. Are you guys with me? Now there's more. Now, when this happens, as far as I know, I'm going to the next level. Just telling you. I have no idea. You? What is this now? Support, 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 break. Now what? Resistance is up here. Break, support, resistance, break, resistance, resistance, break, resistance, resistance. Now what? Need it to break. What does it do? Breaks the other way. And what happens here? Breaks the other way. Trouble in River City. And what do we hold? Support. Now, no way to know what's going to hold, what's going to break. But the structure gives me something to narrate. So if this support, if I get below it, this is resistance coming up. See it? Break below. Looking for it to go there. Where's my resistance? It's there and there. Notice the behavior. This becomes support. No way to know until you get that. Now we are squeezing. And then this is my last shot. So subject to how you manage your trade, you know, you could be out any of these or you're back here. Now, all this is part of your trade plan, and everybody's different. Now let's come back up here. We get our squeeze. So at this point, you could be done. Questions, by the way. Let me just see if there's any question, guys. How we doing in YouTube? Hope you're conscious. Please give a thumb up, a like. If you're getting something out of this, encourages me to keep doing this. There is no cost. Trader Lab's a community that you're all welcome to. There's a link in the bottom of YouTube if you're so inclined. So let's go take a look. What do we know? Where's our resistance? This is resistance from earlier. This is the open, and this is the high, current high of the day at this time. I know this was too high, but what else do we know? We know there's buy stops above the high of the day. So the 60. 60 is really a big number, and the fact that the market's hit its levels and it's coming back up, this is a biggie. And there's buy stops above here. So now the possibility exists to squeeze out the shorts. Market goes up to go down, market goes down to go up, right? So let's see. Now this, no clue. It could be a short or it could be nothing. In fact, I think we talked about this. Yeah, right here we did. This, we talked about this in Trader Lab. Everybody's posting like maniacs in Trading Lab. You should see it. It's a very active community. This is your liquidity sitting in the book. Now, what happens here is very important because if we break above it and pull back, it can act as support. And this is a structured trade in the Trader Lab, but it's advanced. I normally don't go into these, but, you know. And here's the other piece. Look where we are. Key level. We broke above it. We have our resting liquidity. We break above it. So I got two pieces here, and this is advanced Trader Lab methodology. This is support, that level, and this is a structured trade in alignment. All these pieces come in alignment. Now, when it's doing this, I have no idea. You know, it's like, oh, where's it going? And then it pulls back here. Okay? So chop, chop, chop. And right here is a trigger. This is your micro. Now, again, I'm in an advanced process. So this is not anything, you know, I would suggest to anybody unless you've had time in. And here's your test of this structure against this above that. Okay? And that sets up your long. And what you're trying to do then is come back to resistance and squeeze out the shorts. So let's see what it does. So what would happen here is you would take a long over here, you would get risk neutral, and you're going to take out, you're looking for the high of the day, and you get taken out of the trade. Has it ever happened to you? Happens to me all the time. Now, let's look. Support is down here, another level, this area, okay? So nothing going on here. So I'm under this level right here, and I know I just squeezed out the shorts. And look what came into the book up here, by the way. This becomes a long, right? And this comes into the book in blocks right here. No way to know about this, except when this is here, you would be aware. What you don't know with order flow is what's going to happen. Are they going to pull and flip? I mean, why didn't it stop here? You see, this is the whole thing about randomness. So what I see here is a buy sweep. And often when I see a sweep, I start looking for a reversal or at least a counter rotation. This would tell you to be aware of potential counter rotation. And then this comes in the book, and you have to be aware of it, but you don't know what to do about it, right? So you could be trailing, you know, that's up to your trade plan. I don't discuss trade management too much because it's time frame specific, and there is no time here. It's basically fractals or participant based. So what do these guys do? Sellers are here, buyers are here. I'm thinking a sweep and a potential reversal. I don't know from where, and of course it doesn't have to do it. And then it does it. Okay, nice. Now what do you do? VPOC migration. This is too high. I'm going to label it variable high volume node. Let's just follow it now. Now, so you guys know, this is not about trading every rotation. It's about interpreting what's happening at locations. And then if it gets going in areas that you don't have a plan for, then your job is not to trade it. Your job is just to go, what's going on, try to get back in alignment, and let's watch the behavior. So this is too low. So this is too high. We get VPOC migration. If I can't, and here's what this is. The way I look at this, and again, this is just based on an interpretation. Been trading 45 years now, and I had to really change so much over those years to be able to be open to what might be going on. And I want to stress the word might because there's no certainty. So if we can't be certain, what we're certain about is that we don't know. How about that? How about this? You don't know, and the best you have is maybe. Can you live in a world of complete uncertainty 100% of the time? And can you function in uncertainty when your primal wiring seeks certainty and wants to avoid uncertainty? And that primal wiring is from back in the day when is there a saber-toothed tiger behind the tree? So if it's uncertain that there might be one, you're not going to go behind the tree. You're maybe going to go the other way, and that's great for, what do they call that? Natural selection, I think it is, or survival of the species or the fittest. That works really well. But in this business, we have to kind of overcome that need to avoid the saber-toothed tiger, which is primal. So if it's primal wiring, we're pushing against something that is just part of our nature. So subconsciously, we're looking for certainty, so we're going to go on a quest for certainty in an environment that doesn't exist. Back in the day, back on the savannah, there was no certainty that there wasn't a saber-toothed tiger or some other creature looking to consume us. So we had to be defensive all the time and assume and be fearful. So we're fearful here. So we're trying to overcome the fear where maybe we can't create certainty. Maybe we have to learn to manage the fear. And also, how do we manage fear? Statistics, because that's tangible as opposed to emotions, which are intangible. So too low. Now right here, here's what you got. Resistance, support. So here, break low, too high, going to zero, come down, and what do you want to see to go lower? What you want to see is break under here and go. What do? The opposite. I break here and I have resistance. Resistance is here, support is there, and it's one way or the other. I break high. That tells me, at least the way I see the market, that this is too low, and now potentially either long or I'm done. Watch. And where's 60? Where's my stops? Here. What is this setup? Now, subject to, again, your plan. This is either a long at this level, against this volume, against this, or nothing. Okay? And I'm not getting into order flow too deep at the moment. I'm trying to show you structure. All these pieces come together. So the stops are here. Okay? So now I'm going to go up the food chain and look for levels. Let's just see. The gap. Huh. You say, really? Yeah. Fill the gap. And so far we haven't, but what is that probability, you're going to ask me? Here's an interesting statistic for you, and you have to vet these for yourself. Checking out the previous high or low has about a 64% probability. Getting back to the previous low, also a 64% probability. Taking out the first hour's high, a 67% probability, which was here. So all those statistics suggested coming back here, and they still do. If I get inside yesterday's range, then we have the ETH mid. Where's that? What's that statistic? 68% probability. Does that make sense? So, and then there's settlement, but these statistics go down. And 16 is also possible, but these are not, remember, these aren't trade recommendations. How does the Trader Lab work? Statistical probabilities, and you're in a 100% random environment. So the idea is you know where your trades will show up, and you vetted them. It's like waiting for a bus. If you don't have a trade, your job isn't to be playing a video game. I mean, if you want to play a video game, that's good. Go to casinos, get the cocktails. You're going to need them. If you're in a business, you're just waiting for your trade. We're in the trading business. We're waiting for our trade. Let's look at the microstructure. Now remember, we're looking for this. And it's a level. Very important. Yesterday's low. So, and then we have, here, let me show you. This is the current RTH. Where's our next level? It's right there, and to fill the gap, yesterday's low. So there's that red line, the level, which is above us now, and yesterday's low. So there's the red line and yesterday's low. So our objective is to get in here. Then we can move higher or not, okay? So for me, there's nothing to do unless I'm a short-term trader. And then there might be something to do. But what I have found, and I'm always going to say it's not a recommendation, you got to kind of find your groove in trading. This is not about being busy. You're not an hourly worker. This is about waiting. And if you don't have a trade, you don't trade. Because when you put risk on, at least in my world, I want to get paid. So many developing traders are under an illusion that it's, quote, easier to go for shorter rotations so they'll have a higher win rate. It's not looking for certainty. But have you ever thought that the risk that you take for this is the same as you take for something like that? It is the same. Where do you think it makes more sense to trade? For the large rotations or for this kind of stuff where your risk is pretty equal? Many retail traders want to be, quote, scalpers. How many scalpers do you know that stay in the business? Introduce them to me. I want to meet them. In the meantime, those who are in the business are trading risk reward. They're looking at, if I'm risking 3 points on a trade, I'm not trading for 3 points. I'm trading for 10, 20, 30 points when the market offers it. Remember where we're looking to go here. That's how dollars, in my opinion, are made. Now, you have to shape it to your psychology, but I'm going to assure you, I can't guarantee it because I can't guarantee anything, that if you're looking for percentage of wins, you're looking in the wrong place. It's not percentage of wins. It is yield. And the yield is created by the range of the rotation that you're operating in. And that's random also. So if we can accept randomness, then we want to try to catch the larger rotation when it offers itself. And we can't differentiate really between something that goes from there to there or something that goes 30 points. But I do know that over time, if I stay away from the noise, I can get the larger rotations, I might have the opportunity to become a consistent trader. As I develop my skill set, I can operate in any time frame or fractal I want. I have found, though, it's not worth the brain damage to try to trade from there to there, because I can't get in here and I can't get out there. I know statistically this has a high probability in that in filling the gap, right? How could I take a short here when I know that there's going to be stops up in here? I also know that if there's longs in here, they're going to potentially be taking profits here. So I can see the following based on my experience. Return here, front running, counter rotation, and then if we get in the range, more squeeze. And I have a probability of getting here. We're going to watch that. Now, do you have questions? How we doing in YouTube? Hope you guys are getting something out of this. This is Trader Lab. In fact, let me show you the Trader Lab chat. Now, I post regularly in Trader Lab. I am a full-time trader. However, I can talk and chew gum. And the reason I can do that is I use a speech to text, but sometimes what comes out of there is ridiculous, but that's neither here nor there. So this is the Trader Lab chat, and there's a lot going on in here, as you can see. A lot of interaction, discussion, posting of charts. Joe does a nice job, gives his overview. There's just, I mean, there's so many traders in here, you know. Why a short at this location? How to use order flow. Then I'm in here, of course, doing my thing. And I'm basically, think of the Trader Lab like a virtual trade desk. And you're sitting on this desk with other traders. And there are structured trades that we all share and that I've shared. There's 60 PDFs of these, and you can download these in the Bookmap Discord Trader Lab community. There's no cost for that. And a library of webinars. Okay. Observe this level. If you're doing the work, you'd already know about that level. It's on your chart. And if you understand how the market works, you would anticipate potential behavior there. You need to contemplate these things and also put the time in to develop the confidence in the auction. And again, remember, we're not in the business of prediction. We are in the business of anticipation. Remember the phrase I coined. You got to anticipate to participate. This is what we're doing. We're anticipating to participate. What do we see here? What were we anticipating? Profit taking, filling the gap. There's the level. Now what? Not a short, unless it's in your plan. 524 selling icebergs, another 100 sitting up here, liquidity sitting in the book, absorption. That's the limit icebergs. Now I'm talking order flow for a minute. At a level. What would you do if you were long? Would you be taking a profit here? I would. It's not a recommendation. I would be scaling. And why? Because that's what other traders are going to do. So this might be the end of the up move, or after a rotation, we can come back inside the range. And if that happens, what's our next target? Not a recommendation. We have another level here, and we have the ETH mid at 89 or 90. Let me bring it back. This level here, I think it's this one, 85-ish. Let me see, where is it? Oh, I'm losing my mind. It's down here, 85. That's this level there. So I can do this. I can come out to this low side level, which is what we did, And if I come across this range, this is your high volume, I can come back to this level. If I get through here, which is possible, then I have the ETH mid, which is around 90, up around here. And then I can also, I can go anywhere, right? 60.18 is also possible. Just like yesterday, 59.60. Because don't forget, brain is gone again. This was our target on this day. And we got there. So today, we opened under here. You see the structure? Got down here. Now we're crossing back above the 60. That puts this, the gap fill on track. We get into here, then we can push further in somewhere. And then you got your ETH mid. Does this make sense, guys? This is the Trader Lab. And this is trading. I kind of wish in many ways that there, and it's not complicated. What we perceive as complexity is actually randomness. And that's what we perceive as complexity. Trading the auction is not complicated. It's random. Isn't that different? So when we say the market is complex, we're saying it is random. And we can't predict. That makes it complex. Is that logical? So if we understand randomness, we're not going to call it complex. We're going to call it random, because that's what it is. Remember, this is where we're looking for a reaction. And why would there be one here? Why would I say to you, we're looking for a counter rotation here? Well, 45 years of experience is one part of that. But the other part of it is human nature, other retail trader behavior, and order flow. There's sellers. There's the icebergs. They're selling. If I got limit iceberg selling, liquidity sitting in the book, and I'm at yesterday's low, is it reasonable? And there's a level. Is it reasonable to get a counter rotation? What do you guys think? If you're in the Trader Lab, you'd already you'd know that. Now you won't know what's going to happen. That's the difference. Because you don't know either, and I don't know. But I do understand market mechanics, and I understand retail trader behavior. I understand that if there's longs in the market, they're going to take profits when we fill the gap. I also understand after that's done that we can continue higher to my next statistic. That's what I understand. Now, what do I know? Nothing. I know what might happen. I don't know what will happen. Since I'm not in the business of predicting, I am in the business of anticipating and then managing my trade. So subject to my trade plan, if I was long, I'd be taking a profit ahead of this level. I would then, if I have runners, be further back, allowing for a rotation and then a continuation. And I'd either get taken out following my trade management plan, I'd be done, or I'm holding for the next target. Does that make sense? This is what the Trader Lab is. How are we doing in YouTube? Guys, if you're getting something from this, please give a thumb up. A like. Smash the like button, I think is the term I've heard used. Please don't smash anything. When I was on a trade desk, sometimes keyboards would get smashed. I saw a monitor go out the window over at the CBOT. That was unique. And a couple of other things I can't talk about naturally. In fact, a lot of things. But, a lot of testosterone floating around, sitting on a trade desk with other traders. And it takes a certain personality type to do that. The stress was unbelievable. I could tell you that for me and others. I built trading systems when I was managing dollars because it was across a lot of asset classes. And I learned a lot when I built systems. I found out what curve fitting was all about. And I found out that even before I built systems, I was really doing processes that were defective, but I didn't understand it. I thought I would do it better with systems. And what I did is I curve fitted better with a system than I could, going back with a screwdriver and tweaking indicators, which is what most retail traders do. They don't understand that they're trying to somehow have the past tell them what's going to happen now. How can that happen when what's happening right now is unique? The behaviors are somewhat consistent, but how, when, and where is the random component of all this? So we know that if the market goes down, there's going to be shorts in the market and they have the potential to get squeezed. We know if the market goes up, like it did on Friday, that if we open and gap below it, that those longs have problem. Then we get new sellers in today, and what happens to them? Now they're getting squeezed. And write this down if you haven't heard this, and this is something I always talk about in the Trader Lab. The market goes up to go down, and the market goes down to go up. And all fractals and all time frames. Isn't that interesting? Well, why does it do that? Because the market rotates. And when it gets lopsided, then the guys on the other side, the shorts as of from this morning, become the buyers. The shorts become the buyers. And then these buyers potentially will become the sellers. And this happens in all time frames or fractals. So that's why here you see a seller, here you get a buyer. Well, why are we going down over here? Now you've got sellers here, sellers here, sellers here, but we're going higher. So if I understand that we're going up and I have statistics, then when I get the counter rotation, where's my support? It's right there. When I break high and I get the counter rotation, where's my support? It's there. When I break high, and my support is here, and my support is here, and my support is here. See the change? Microstructure. See the high volume? Microstructure. So, do I want to be a seller on this rotation? Maybe. I'm not, but I'm saying is, what's your trade plan? Do you want to sell the gap fill, which is a reason for a counter rotation? Or do you want to use the counter rotation to get long to come back into yesterday's range, if that happens, and it's not a recommendation, to go here? What's your plan? Do you have a plan? Now, you're going to say to me, well, Tom, I could do either one. And I'm going to say, yeah, of course. What's new? Where's my support? Let's see. Let's see where our support might be. Whoops. Just blew something up on another screen. Hold on. Push a button in the wrong place and it's chaos. Okay, back here. So where's our support? Let's start looking at our levels of support. Micro high volume structure. I'm just going to throw some lines in here for you so you could see it. Chop, chop, chop is a consolidation. Passive buyers are here. Passive sellers are there. Break high. Top side of this is now support. If I draw a little here, I'm going to draw a little box here. I just want you to see how you can read the market. It's not complicated at all. Absolutely not complicated. Random, not complicated. This is a little high, this. Support. So the way this works is this. This is resistance. This is support. This is where your volume is. You break high. Now you notice how it's behaving here? This is your support. Your stop could be under here or under here. And these are longs, and you're looking for it to come inside to go here. And this is not a recommendation, naturally. This is structured trading. Now, for most traders, this is not a trade for them unless it's vetted. And I consider this more advanced. You never need to be doing this if you're in Trader Lab in order to build a business. As you develop as a trader, and I'll tell you, I'm still developing trader myself because I always want to get better and I want to make less errors. Oh yeah, I make them from time to time. I'm human. You can't take away your humanity, and I don't think you ever want to. What you need to understand is what creates errors. It could be fatigue, it could be getting myopic, or it could be FOMO, or making it up as, whatever it is. Those things you can work on and improve. One of the things I did early on, I created something for myself called the error cost calculator. And instead of making an error and just forget about it and go on to the next trade, which is what our nature is, I started quantifying what the cost was of the error. Making it up, jumping out, moving the stop to break even, skipping a pick it, right? And I started keeping documentation of the errors. Well, I found those errors cost me anywhere from $5,000 to $20,000 a month. And I can tell you, write a check out and stick it on your monitor. You'd be surprised how motivated you get. Have you guys done that? Have you even thought about it? James, if you're interested in the iceberg detector, go to bookmap.com deals. In fact, right now you can save 50% on the first month, as long as we're waiting for this long to ferment. Again, not a trade recommendation. Remember what we're doing. We're going for this. We'll just see in the time I've got left here whether it does it. This is Trader Lab trading. This is not complicated. I mean, I believe anybody can learn this. I think if anyone comes to Trader Lab, they can learn how to trade. It's a personal belief. It doesn't mean you individually will ever be successful trading. That has nothing to do with it. For a person to succeed, it takes a lot of tenacity and having an open mind and the willingness to let go of things that you believe, just like the ancient mariners who thought the earth was flat and really stuck to it. This earth is flat. I'm not going there. I'm not going to go to the horizon and fall off the end of the earth. Well, traders think the earth is flat too. Only one indicator, or only that fancy guru out there who tells you how easy it is. And just get that checkbook out and you too can be, successful. No, guys, not so much. You can save, there's only two, today and tomorrow, you can save 50% on that MBO bundle. That's the stops and icebergs. It's really cool. And that's what I find edge is what this business is about. And like anything, when you get a high tier tool like Bookmap, you got to invest in yourself and in your education. It's not a red light, green light. That's just naive. It just is not the way this business works. Red light, green light. Really? You're going to compete against the brightest minds on the planet. What are you going to do? This is the major leagues. There's nothing in between. You're either going to be going to majors and you're going to develop. You're going to have coaching. You're going to be in an environment that's professional. You're not going to be in romper room. You're going to have realistic expectations, and you're going to have to hold yourself accountable. You want to build a business, you got to treat this like a business, but you got to also understand the business. How can you create a business that you don't understand? By the way, Global Plus annual subscription, 30% off. This one ends January 2nd. Go to bookmap.com. This, guys, that's all I can tell you. But if you don't have Bookmap, by the way, where's our target? Boom. Where was our last long? Here. Not a recommendation. What do you guys think? Would this work for you if you took the time to understand it? How are we doing in YouTube? Please hit the like button. It encourages me to do this. There's no cost for the Trader Lab. By the way, you say, really? Yeah. What are next targets? Well, there are other targets on the hit parade. I tend to take them in stride. What's stride? That's my next target. Now, this is real time, right? And that's not a trade calling room. It's a waste of your time. You go to a trade calling room, go to the movies, because you're not learning anything. I have streams that are recorded in the Trader Lab. They're up to 5 hours long of real-time narration. You want to see real-time narration? You can see it. And you'll see that it can be done. But what I find is instructional. And the reason I do my streams this way, I'm not here to impress you. I'm here to educate you. And even just to open your eyes to possibilities. That's all. I'm not saying this is the right thing for you. And there's not one way to trade. But most of us run out of time and run out of dollars long before we ever get an understanding of what even this business is, because we keep trying to fix something that might be defective, and that's defective beliefs and a defective process. I coined a phrase for that, and it's all based on my own 45-year experience, and that is Trader Groundhog Day. Because the outcome is random, anytime we put a trade on, whether you're using a dartboard or just closing your eyes and hitting buy or sell, and you don't even know which one, you're going to have winning trades. So we always believe we're doing the right thing. And then we go down these paths and we get strings of winners. I mean, everybody does. Gamblers do. That's why they keep gambling. Yet the house, the guys with the edge, who only play games that have a statistical advantage to them, this is what we do in Trader Lab, they extract the dollars over time in a random environment from the gamblers. That's the business you're in. By the way, it's pouring here in Costa Rica. And I mean, see, the thing about rain in Costa Rica, it's not like we get up north, like in the States. It's more like jungle rain. Let's turn the spigot on, and you need a raft because it's either on or off. There's none of this drizzle stuff, just so you know. Please click the like button. Notice we got our next target. This is all Trader Lab trading. If you took along here, would you be okay exiting ahead of this? Right there. Trader Lab. Let me see. And we're all late to the party. Let's assume you get in here. 80. 9, 10 points. Are you okay with that? Not saying you should. Just saying you could. This is the Trader Lab. Please give a thumb up, and remember these streams are available exclusively to Bookmap Discard Trader Lab community to reverse engineer, screenshot. Plus, don't forget the Trader Lab chat. It's open to everybody. If you're in YouTube, click the link down there. Be sure to go to bookmap.com. If you're interested in Bookmap, it's a high-tier order flow tool. I started with it in 2015. It is constantly being improved, updated. The developers at Bookmap, I always think of Santa's elves. They're cobbling away, making this product better and better. By the way, this suggests an upside rotation right from here. Let's see if we get it. And resistance is sitting right here. Resistance, upside rotation. Resistance, resistance, upside rotation. Let's watch. That's not a trade recommendation. All it tells me is rotation. What did this tell me? Rotation. What does this tell me? Rotation. These are order flow phenomena. This says rotation down. This says rotation up. Resistance is there. High volume. And there. High volume. Rotation up, high volume. Rotation down, high volume. Potential short or out. Doesn't matter. See, the thing with this is, if you know this is a long, because you'd already know that, you would anticipate it. Most retail traders are playing a video game. When I see this, I anticipate a counter rotation. When I see this, I anticipate a counter rotation. When I have a statistic that tells me I have, and what was that statistic? You wrote it down, 68% probability of going here. That's why I would take a long here. Is that a process that might work for you? And if it's a little too much work for you, then it's probably business of trading might be too complicated. Just saying. And I'm not here to offend you. I'm here to share with you my experience and the experience of all the other traders in the Bookmap Discard Trader Lab community. We've all done the same thing. The difference is, what are you going to do about it? If you want to be in the business of trading, I think you might want to consider doing something different if what you do doesn't work. And everything works at times. That's the catch-22. You know, I had 5 winning trades yesterday. I'm going to work real hard and have it again today. And then you're under the bus. Have you ever thought maybe those winners are just random? And the fact they come in bunches doesn't really mean anything? Most of us don't think that. I didn't. I thought, gee, how do I make this better? Right? So that was me. So let's look at the structure. What do we know here? Support was here. We have support there. We have support here. And we're going through it. So this is really the target, right? As you know from this. So there to there. Now, the way I tend to trade, and again, I'm not saying what I do is really any good. It's just what works for me, is I trade targets. So I look at the structure and I go, well, this is my next target. I'm going to trade to that. And then along the way, I have a trade management process that trails. You know, okay, you know, right, lovely. Boom, reversal. Reversal. Bing, bing, bing. Here, counter rotation. Potential short or nothing. Out. So let's see what's going on now. Wow, is it raining here? I wish I could show you the rain. Let's watch here. See what it does. I don't have any trades now. Okay, for the moment, this was my last trade. You know, you could have been long here, there, to there. Trade's over. Now let's watch over here. Resistance is there. Potential support is here. Stops are under here and under here. I have nothing to do. So I'm a tourist. But let's watch. I've only got 2 minutes left. If you have further questions, there's a link in the bottom of YouTube. There's our location. Let's watch. Microstructure. You saw the line on the chart. I don't call trades. Now we want to watch potential behavior in between here. Okay? There's so much more, and I don't have time. There's a link in the bottom of YouTube if you want to visit the Bookmap Discard Trader Lab community. There's no cost. It's available to everybody. 5980 is the level we want to be looking at, and you want to be watching this area in here, there, and 80. Oh my goodness. Guys, the rain is so unbelievable. Please give a like. If you want more information or you have questions, come to the Bookmap Discard Trader Lab community. There's that link in the bottom of YouTube. I look forward to meeting you there. Remember, this stream's available exclusively to Bookmap Discard Trader Lab participants to reverse engineer, screenshot. Don't forget the current opportunities for the current sales. You don't want to forget these. 30% off Global Plus annual subscription. It's amazing. And the MBO package, the Stops and Icebergs, it's ending tomorrow. 50% off the first month. These are terrific. If you ever wanted to get your hands on a high-tier order flow tool, this is the time to consider it. If you have further questions, go to bookmap.com, click deals, and it can tell you how it works. Also, if you want to visit the Bookmap Discord Trader Lab community, feel free. Thanks, Debbie. And YouTube, please give the thumb up. And this stream will be available to Trader Lab participants. If you have further questions, use the link in the bottom of YouTube. And I look forward to meeting you and seeing you in the Trader Lab. Thanks, guys. Have a great day. And always trade with a vetted, structured trade plan that gives you a statistical edge. If you want to learn more about that, I'll see you in the Trader Lab.